Welcome back to episode 2 of the Idiot Trading Challenge. In episode 1, you saw us kick off the challenge and hear about our tactics going forward. In this episode, you're going to find out how that went. If you're enjoying these videos, make sure to like and subscribe. Stick around till the end where I'll be telling you how you can help me succeed in this challenge.
I think Tom's going to go big. I think he's going to go one or two.
He's going to split up. He's not going to spend everything straight away.
He loves his entertainment. He loves Disney. He loves Cineworld.
Facebook or Twitter, something like that as well for the social media side of him.
So this is my account. Not great for so far, down 2.5%. But we're now in the BT group, Cineworld group, Dignity, Gamma Communications, Microfocus and Royal Dutch Shell. Sold off Learning Technologies, they were on a downward trend, got out and they continued to go down, so that's at least a positive that I didn't get caught up too much in that. As you can see, I've bought Dignity and Shell after having a look at them last night. Unfortunately, today's just been a bad day for the market as a whole, so we're suffering a little bit there. The ones I'm really liking are BT Group, Dignity. I think Shell's one of these risky ones, it could fly. And Cineworld Group a little bit. I don't know if I'll continue with Gamma and Micro in the real thing. But yeah, that's where I'm at the moment. So hopefully that gives you an insight into what I'm looking at.
So right now, literally what I'm doing is I'm just looking at all of the stocks in the Footsie 100. Now, I mentioned this a bit on the yesterday recording, but essentially what I'm looking at right now is what I think is going to improve, literally looking back over the past 6 months, mainly before, around January, February time, just seeing what's going on. If I think things will start rising up to that, I'm not sure if they will, but just trying to put a few little figures behind this. Once I've got a list of what I think could be good, I'm going to do a bit more digging, see what type of industry it is, look at the news, see what's going on, kind of go from there, really try and dig into what I could use for this challenge and maybe a few that I can use for myself going forward. Predictions for this and what I'm thinking Jono's going to do. Well, I think he's going to split up. He's not going to spend everything straight away. Kind of know that he started to do that already, but I don't think he is. I think he's going to hold on to a bit and maybe try and pick something up a bit later in the week and then go from there. But stock-wise, I think he's going to pick up a couple that are a bit cheaper. So your ones that are probably between 50 and 100 at the minute, that sort of thing. I do think he'll pick out something bigger as well. Amazon, Facebook, something like that. Probably more away from like no, I think he might go Facebook or Twitter, something like that as well for the social media side of him, knowing him. I think as well, just from little bits that I've picked up and also just knowing what he would probably go for, I think he's probably gone for something over in the US as well. Not quite sure why I'm thinking that. I just feel like he'd look around a bit. He will definitely be using this side of the trading with the free app to actually see what's going on, really try and get as much information as he can. I'm sure he'll start sending me stuff soon, which will probably try and throw me off the trail. I'm basically just going to try and ignore most of the stuff that he comes through with. Anything else from that, we'll just have to see, but that's my plan of action at the moment. I'm going to crack on and do a bit more learning, really see what type of information I can pull together.
So this week's been a bit of a shocker. The Footsie 100 fell by 6%. My portfolio fell by 8.87% as of closing on Friday. So not fantastic for the test week. However, I did change my tactics quite early on. I realised that on Tuesday there was a bit of a dip in the market, so I decided to kind of take a different tact and just experiment with even more stuff and try a few more risks and learn some of the stuff. And then in a spreadsheet I've been preparing for next week. I think Tom's had a bit of a rough time as well, so I can only hope it was more of a rough time, given that this is just a demo account, this isn't our real money. Hopefully I can get the benefits of not having the forfeit as we go into the first week, which we'll discuss later on, possibly when me and Tom are on the call together. But basically, I decided to invest in Google. I didn't really have any an American like big tech company that we're all aware of. So I just wanted to invest in them and see how it went. So yeah, invested in them. Not fantastic, but only down 1%. BT Group, someone who I was quite interested in at the beginning of the week, is down 8%. But I've been doing some wider research as part of planning for next week, and I'm really not convinced by these. I'm starting to look a bit more long term. As you can see there, the 1 year graph is pretty diabolical. Well, what I was looking at these guys was like, I didn't feel like they'd kind of hit their potential. There was still a bit of room for movement, like around this time here. They could have gone back up to like these little peaks here, but they haven't really shown that potential. But when you look at the maximum graph, it's just been a downward trend since like 2015, which isn't really a good sign, even with the current climate. So I don't know if I'll be investing in them going forward. Cineworld, one of Tom's favourites, outside of this challenge. He's looking at this drop here and seeing if he can bring it back. But I'm not sure. I just think, again, big drops and downward trend. But there's someone I might look at as a bit of a speculative kind of thing. But I think there might be better options out there. Dignity, I'm still interested in these guys, actually. They work in the funeral business, but again, big drops. It's not looking good. If we go on to a shorter graph, 1 year, they had this kind of period in March where they're around here, and I just think they might jump back up to maybe around this like kind of 450 mark, which would be a good return if they could jump up from there from about 300. So, maybe. Gamma Communications. Now these are ones who I'd invested in last week just simply based on the sector that they're in to see how that sector was doing. But having read a couple of papers and Googled them a bit, a few people are recommending them as like a bit of a speculative kind of share. And they're up 1.1% this week, which is good. When I look at the maximum chart, it doesn't go far enough back on here. It only goes back to the 19th of Jan. But they are looking like a good company, having done some further research into them outside of this app. Interesting market, interesting stock. There's just one thing which I'll possibly talk through a bit more in future voice notes and videos like this. But there's a thing called the 21-day trend and the 50-day trend, which I've been trying to read a bit more about, and I don't really understand it too much, but this idea that if the 21-day trend drops below the 50-day trend, that's not really a good sign. And they're just coming close to the 50-day trend, but they always say this is really good test of a stock. If it can bounce straight back up, it's a good stock. And so they're about to hit it probably early next week. So I'm just going to keep an eye on them. I might not invest in them straight away. I might wait till a few days into the challenge before I invest in these guys, if I do. But yeah, they look like a good company. If we scroll down, what's that return at 1.1%? Yeah. If you keep going down, revenue's been going up each year. And then the balance sheet looks pretty healthy as well. So there's only a couple of questions around them, so I'm probably going to invest in them. Grubhub's the next one. This was quite interesting. I literally saw something ping on my phone to say that Just Eat and Grubhub were in merger or takeover talks. I can't remember which one. I was a little bit busy because I just invested in Grubhub because I found them first. And I just thought it would be interesting to see how a stock reacts after this information is shared. So I invested in them, and actually they've done quite well for me over the last week. You can see they're up 6.74%. Got in at this kind of level here. So that was quite interesting. Could be a good one to maybe keep going forward, but I wonder if they've had their return for now. Increase in revenue, not a bad balance sheet. So I'm just going to do some more investigating into these guys as actually as a wider share if they're worth investing in. Micro Focus, one of the worst performers aside from Cineworld. At the beginning of the week, I was just invested in industries I thought were interesting and stocks that I thought had potential to grow back up to where they were. So if you can see here, like February, March time, they were still quite high, and I thought they had a bit more room to jump back up, but they don't look like a particularly good stock, when you start looking at it. Declining revenue since last year, so yeah, probably one I'm not going to invest in the real thing. And then again, Royal Dutch Shell, This was just to invest in this kind of company and just see how it reacted, but down 11%, huge drops there. We pretty much invested at that little peak right there. You can zoom in a bit more on that. Yeah, literally at the top it's been in the last week or so. We were literally in up there, so that didn't go too well. But this is what this test week was for, live and learn kind of thing. So it'd be interesting to see if I delve into any of these stocks going forward. So yeah, overall we're down 8.87%. I have got a few stocks that I've kind of got my eye on in terms of investing in for the next stage of this little challenge. But yeah, not a great week. I don't think we were helped by the fact that the Footsie fell itself. So, it's not possibly as reflective on us as speculative investors as it should be. It was as much bad timing as it was our naivety, but yeah, not great. Fingers crossed Tom has done worse, that's all I can say. But yeah, thanks for watching us, guys, and hopefully this is bringing you some form of entertainment, some kind of light relief.
Thanks for watching another episode of the Idiot Trading Challenge. If you've enjoyed this, then make sure to like and subscribe to our channel. And if you could share it with a friend, that'd be absolutely amazing. If you want to help me out in this challenge, you can sign up to Trading 212 platform via the link in our description. If you do that, we'll both receive a share free of charge worth up to £100. Obviously, make sure to check out the T's and C's before you do that. But until next time, thanks for watching.